let's just jump right into current interest rate environment. Why are interest rates staying so low, and what on earth is going to happen to them as we move into 2022 and beyond?
The reason they're low, to answer your question, is because the Federal Reserve is in essence printing money to buy the securities that are what mortgages are based on. They've provided this huge demand for mortgages, and that's made the price very, very low.
If the government artificially pushes down the yield on, let's just call it mortgage-backed securities, or even, treasury bonds, which the U.S. government can buy its own bonds, then what happens is investors from around the world have to accept that same lower return, and that keeps mortgage interest rates low.
That's right.
And
That's right.
What is it that you think makes the government still today want to continue to stimulate the economy? What do you think? What do you think is causing it?
Well, I think there's two factors in play, but the biggest one is that they still don't feel like there's this full employment. They feel like there's an underemployment out there. So people may have jobs, but they may not be earning the type of wages that they think they should be making. So they need to stimulate the economy to support this wage growth that they want to go on.
What needs to happen in the world for interest rates to rise?
Well, the Federal Reserve will have to stop manipulating the markets by buying these types of securities. And they stated that they intend to do so as early as the next 60 days. They'll start that, what they call tapering, where they will slowly scale back
their
purchases, amount of securities that they buy. The deciding factor will be, like you talked about, all the other world's investors. Do they come in and take their spot? And if they do, then that's going to continue to keep rates low. But if there's not the same amount of demand for those securities, then we'll see rates tick up.
I have seen many articles and many discussions published that say that the government, and I'm not even sure who's doing this, I would assume it is the entity that supervises Fannie and Freddie. They're saying that they want to change the appraisal rules. You buy a home, you get an appraisal that shows it's worth $500,000, but the reality is that the interior condition of the home doesn't support a $500,000 appraisal. Well, the government, in all of its wisdom, is saying, hey, maybe we don't need to require appraisers to go inside of homes. I can't imagine buying a home and then realizing, oh my God, I paid $60,000 too much because the government says I don't need an appraiser to come in my house.
I would agree with you 1,000%. I think the government, these entities that are making these decisions, are saying that the analytics are smart enough, just looking at the comparable sales and looking at the online data that's available, for somebody just to sit behind a desk and say what the value of the home is. But as you know, because you and your team get the opportunity to actually go inside these homes, is you can have two homes in the same neighborhood, exactly the same square footage, the same floor plan, but one of them could be an absolute fabulous home and the other could have been torn to pieces by the previous homeowners. I think the investor community and the mortgage lending community is going to comprehend that on a different level than again, like Washington may, and you may see some pushback from our industry to say, hey, that may not be the easiest corner to cut out of the mortgage processing. There's a lot of things we can do to make it easier to get a mortgage. Maybe the appraisal is not the easiest or the first thing we should go to.
Most common pitfalls when applying for a mortgage, and I'd like to give the first guess, and that is sourcing your funds.
That's it, without a doubt. I jotted down a few, but the large deposits that are in your bank statement with the inability to document it, we're living in an environment, believe it or not, where a lot of folks like to keep a lot of cash at home. And then they say, okay, well, let's go buy a house. And they might take that big lump sum of cash and say, here it is. Well, that doesn't work. You can't use cash to buy a home. The money has to be on deposit with an institution, and we have to be able to tell where that money came from.
But it has to be on deposit for 60 days. So if you put it in the bank now, and then 6 months from now you started to buy a home, nobody's asking any questions. Am I right or wrong?
That's right.
Yeah.
And that's why we as mortgage lenders want to talk to potential buyers as early in the process as possible. Don't wait until the very last minute when you want to buy a home. Reach out to us early on, and we can guide you through those challenges and potential pitfalls.
I love that. And one of the things I'd like to mention is that a lot of times people are hesitant to really commit to one lender. And I say go ahead and commit to one lender. Doesn't mean you can't shop around later in the process, but then if you find something better, just go back to that original lender and say, hey, ABC Mortgage will do it for a little bit less.
Second pitfall I
Yep.
wrote down, having credit inquiries during the loan process. We continue to
Oh.
monitor the credit. You may not have opened up a new debt, but if you ran through Macy's and they were going to give you 10% off if you open up an account, don't do it.
Absolutely.
Pay the 10% extra.